Hello guys and welcome to this video. In this video I will actually talk about 5 books that I've read within personal finance that have sort of like changed my approach to how I invest and how I make money in the stock market. These books are extremely good and I haven't read these books just once, not just twice, I read them multiple times. And some of these books I actually read more than once per year because there's so much information in these books. Personally, I use these books to see how I'm doing, how my strategy, how my investment strategy actually is, and then I'm comparing it to what they're saying in these books in order to find places where I can improve and get better at investing myself. So let's get started. So let's jump to the first book that I want to talk about. The first book is actually called The Little Book That Beats the Market. This book was first of all released in 2006. The author of the book is a guy called John Greenblatt, who is a manager of a hedge fund, Gotham Funds. This fund actually has $5.6 billion of assets under their management. So it's a quite big fund. This book is very easy to read, it's very easy to understand, and this is a book that I would recommend to new investors as well. Overall, what this book actually does is that it comes up with a magic formula. Basically, this magic formula for investing consists of 2 different performance indicators, which is namely the ROA, which is return on assets, and the price to earnings, which is the PE ratio. This book does overall provide a lot of value about investing for the personal investors. So this book is essentially looking at 2 key performance indicators and talking about what these indicators are and how you can use these indicators to make money as an investor. These 2 indicators are 2 fundamental things to understand as an investor, and therefore this book is extremely good. It provides a very simple way of investing, and it provides a way of investing that actually has proven to work over time. So therefore I do recommend this book to anyone who is into investing and to any sort of level of investors, whether you're a beginner, intermediate, advanced, or whatever you want to call it yourself, then I do recommend reading this book. So the next book that I want to talk about is called The University of Berkshire Hathaway. Now this book is made by 2 of the best investors of all time, namely Warren Buffett and his right hand, Charlie Munger. These 2 have been the managing people of this firm for as long as it has existed. These 2 people have made absolutely insane returns if you look at how much wealth they have accumulated over the years. They have beaten the market again and again and again, and they will most likely continue to do so. And they have been around forever, and they have understand what investing is all about. So learning from some of the best is always advisable and is always a good idea. This is one of the books that I have read numerous times and that I will read even more times in the future. Now, this book was first of all published in 2017, and this book is basically talking about all the annual meetings that there has been within this company from when it was founded until 2017. So basically it's talking about how these 2 people have invested over 30 years from the start of the company to 2017. So it's talking about how to invest during all kind of different market circumstances, whether that's high interest rates, low interest rates, high inflation, low inflation, a combination of the 2, or whatever it is. And this book is basically talking you through how you should invest, how you should adjust your portfolio based on what the market circumstances are. And that is why I would recommend this book to anyone who's into investing and who actually wants to be profitable over time. These 2 are people that you should learn from and that you should read a lot about because they have done what you're trying to do for so many years and they have been so successful. So this book is not the most easy book to read, so I would recommend that you do have a bit of understanding about investing and finances before you actually read this book in order to get the most out of it. But if you do have that, then I would highly recommend you to read this book and see what it has to offer you. So the third book on my list is actually a book called A Random Walk Down Wall Street. This is a book that some of you will probably have heard about before because it is an extremely popular book within investing. This book is basically teaching you how you can make money and how you can beat very many professionals in the market over the long term in a very simple way. This book is made by Berkshire in 1973. Basically, this book is talking about how you as a private investor can beat very many of the professional hedge fund and actively managed funds there is out there. And it's actually talking about how you can beat 99% of the market consistently over a long time. This book is essentially questioning all techniques there is to buy stocks in the market. It is questioning the value approach where you define or you calculate the intrinsic value of the stock and you compare this intrinsic value to the market value, and then you buy whether the intrinsic value is lower than the market price. It also questions the whole approach to technical analysis and basically says that it's something you do for fun and not something you do in order to make money. You will be much better off by just buying something and hold it instead of trying to trade all the time. So basically this book questions everything, and then it comes up with an analysis where it's basically talking about how you can beat the market, or at least 99% of everyone who's actually buying stocks over the long term. Based on the analysis that is made in this book, it is concluded that the majority of professional stock traders, hedge fund, banks, whatever it is that you can buy stocks in, they don't outperform the S&P 500 index over the long term. And if you actually were to get the returns that the S&P 500 were to offer over the long term, then you would, by only buying the S&P 500 index and hold this stock for maybe 10 years, 15 years, whatever it is, then you would have done a better job than 99% of all other investors there is out there. And that includes all the professionals as well. So this book is basically saying that you don't need all these fancy techniques in order to get a decent return on your investments. And actually you can just buy these indexes at a very low cost and then you hold them and you beat the market. It is not more complicated than that, according to this book, to actually consistently beat the market. This book actually came up with an analysis that if you as an investor was to put $1,000 in the S&P 500 index in 1969, then you would in 2017 actually have $736,000. If you did put this into the average hedge fund or actively traded fund, whatever you want to call it, then you would have earned $500,000. So basically you would have earned $200,000 more by just buying an index at a low cost yourself and holding this, compared to what you would have earned if you were to invest in a active fund. So basically the conclusion of this book is that you shouldn't really worry too much about all of these value techniques and so on that exist. You should just simply buy the S&P 500 index at a very low cost and hold this index for a long period of time, and then you will outperform 99% of all the other investors there is out there by simply just getting the return there is on the overall market. The second book on my list is a book called The Intelligent Investor. Now this book is actually written by a guy called Benjamin Graham. This guy is actually the father of value investing. So if you're into value investing like I am, then this book is a must read for all of you. Benjamin Graham is not only the father of value investing, he basically implemented the whole principle of value investing and introduced the approach to doing it. But he was also the teacher of Warren Buffett. And Warren Buffett is actually using a lot of the things that Benjamin Graham has told him back when he had him as his teacher. So if this is the principles that Warren Buffett is using to make money, then it is something that you should be consider using as well. Basically, this book is talking about how he sees the market and how you should buy in the market and how you should get an understanding of the general market. This book is a bit of a technical book, and it does require that you have some understanding of the overall economy, but it also requires that you have some understanding of investing. This book is most likely one of the best books in order to teach you what intrinsic value actually is and how you can calculate the intrinsic value of a firm. This book was actually published in 1949, and it is still one of the top-selling investment books to this day. That only speaks about how good of a book this actually is and how much value you get from reading this book. Basically, this book is going to teach you 3 different principles. The first of these principles is that it's going to teach you about intrinsic value and how to calculate the intrinsic value of a firm. Based on that, you will be able to buy a stock at a discount, which is basically what value investing is all about, namely that you buy a firm that has a lower value than the current market price is. The second thing that this book is going to teach you is how to see the market, sort of like cycles, whether the market is in a bear or a bull market. And it's going to teach you how you should invest and how you should base your strategy on the market circumstances and the conditions of the overall market. It's also going to teach you on what you should look at and how these cycles sort of like appear in the market. So it's going to teach you a lot about how the market fundamentally works, and that is a very valuable thing to know when it comes to investing. The third thing that this book is going to teach you is called the margin of safety principle. Basically, this principle is saying that you should only buy stocks where there is a high margin of safety. The margin of safety basically means that the market value there is should be a lot higher than the intrinsic value you calculate. And if this margin is big enough, then you should buy the stock because it is at a large discount. In this way, you have sort of like a built-in safety in every investment that you make. And this investment safety is going to provide you with long-term gains, basically. And it does also keep you from buying overvalued stock, which is basically the worst thing you can do if you are a value investor. So this book is going to teach you everything there is to know about value investing. It's going to teach you a lot of principles there is within value investment. It is going to teach you a lot of things about how the market works fundamentally. And do remember that this is the teacher that Warren Buffett had. And if this book is good enough for him to invest based on, then it is also probably good enough for you to invest on. It is, at least for me. The number one book on this list is going to be the book called Rich Dad, Poor Dad. Now, this book was made by Robert Kiyosaki in 1996, and it has been the best-selling personal finance book for the last 20 years. This book is extremely good. It is one of the books that I read at least one time a year, and I would highly recommend this book to anyone who's interested in personal finances, investing, or whatever it is within this area. Then I would highly recommend you to read this book. In my opinion, it should be mandatory for everyone to read this book, because it does teach you the core principles of what personal finance is, and it does teach you about the mental side of money and how you should be thinking about money. Basically, this is an entry-level book. It is something that you can read over a weekend. It's not a very long book, and it's extremely well written in a language that sort of like everyone understands, even though they are speaking about some pretty complicated topics. Then it's something that everyone can follow. Robert, who is the sort of like head figure in this book, he basically has two dads, or he has sort of like one real dad and then he has a mentor, but he refers to them as two different dads. So basically, his normal dad, he has a very, very high education, and he is a principal at some sort of a school. So he does earn a pretty good salary, and he makes a lot of money through his job. However, this dad, he spends all of his money on different things during the month. So he doesn't really have a whole lot of money in his bank account or his savings account. So basically, even though he's making a ton of money, he's not really a rich person. However, his other dad, he doesn't have any fancy degree or anything like that. And based on paper, his life shouldn't be as good as it is with the other dad, because he does have all of those things under control. However, this dad, he is a multi-millionaire. And the reason he is so is because he does follow the principles of money. He does make money work for him. And that is basically what this book is going to teach you. It's going to teach you how to make money work for you and not making you work for money. And that is the fundamental difference between the rich and the poor, according to this book. So it is going to teach you how to think about money in that terms, but it's also going to teach you about the whole mental aspect of money and how you should be thinking, how you should be doing. And yeah, it's just overall a really, really good book that I do think you should read if you haven't read it. And if you don't want to read it or whatever it is, then just do yourself a favor and go listen to a summary or whatever it is that you can find on here on YouTube. It's going to be worth it. So these were my 5 book recommendations. These books are very, very different. They're very unique, and they each and every one of them teach you different things about investing. However, they are all sort of like giving you a better understanding of who you are as an investor, and they're giving you a better understanding of how stocks and how the financial markets actually work. And that is something that you can use within your own investments in order to be more successful at investing, but also something that you can use in order to understand how the market works. So I hope that you enjoyed the video. If you did, then please subscribe to my channel and leave a comment below, like the video, and yeah.